And joining me in the studio now for his take on some of the deals and trends this week, Roger Montgomery from Montgomery Investment Management. Roger, just on the housing market, a lot of people think housing prices are about to collapse, but
Yes.
What sort of impact has this quite huge rate cut really had on the housing market, do you think?
Well, what people need to realise is we've heard a lot of noise from the banks over the last 6 or 8 months saying that wholesale funding rates, their international wholesale funding rates, have been going up. In fact, wholesale funding rates internationally are almost as high as GFC levels. So whether or not this rate cut is passed on in full by all of the banks is going to be the question. And I think what's really interesting is the fact that monetary policy now is a much blunter instrument, because the banks have signalled that over time they're going to move rates based on their own costs and not necessarily what the RBA does. So this rate may need to be followed by another one. And I think the reason why we saw 50 basis points, which was only 33% forecast, if you like, most people were expecting a 25 basis point cut.
So you're not thinking that this is going to have much impact on the housing market?
I don't think so. No, not for a long time. I think we need to see confidence return in the economy, and that's not going to be spurred by one decision, one rate cut.
Bubbles elsewhere in the economy, you
Yes.
reckon, mining services in particular?
Yeah, well, it's very interesting. As a fund manager, I see lots of analysts from broking firms, and for a year we've owned shares in mining services businesses. And what's really interesting is a year ago, brokers didn't have a mining services analyst, and now just about every broker that visits us brings along their mining services analyst. And I was having a look at the list of companies today that we're interested in buying or that we're interested in investigating, and a large proportion of companies listed on the exchange are mining services companies.
And those analysts, just to interrupt, those analysts are quite different from the resource analysts, aren't they?
Yes, they're quite separate to the resource analysts. Yeah, but obviously this particular industry, mining services, is very dependent on the resource industry, and particularly iron ore prices and coal prices, which I think are trending down. And now that might not happen. I might get that completely wrong. But if I'm right, China does slow down, iron ore prices do fall, then all of the projects and all the tendering activity that these mining services companies are saying is in the pipeline may just dry up. And that, combined with the fact that everyone's talking about mining services and their prices are at recent highs, makes me very nervous. I think it's another bubble.
Spotless Group, a lot
Yes.
of pressure from shareholders to sell, obviously, to the private company PEP. Do you reckon PEP got good value?
No, I don't think PEP got good value, but I think shareholders should take the money and run. This is a business that hasn't increased its intrinsic value for a decade. I can't imagine the economics are going to change dramatically in the next 5 years, and for that reason, this is a very generous bid at $2.71, and I think shareholders are right to actually demand that the bid be accepted or at least recommended, and they get the opportunity to decide.
Sometimes private equity, of course, can be pretty brutal and get some value where analysts, even like yourself, don't find it.
Well, that's because they use leverage. So they only need to make a marginal improvement at the EBIT level or the EBITDA level, and they can still make a 25% return because their bids are very highly geared.
So it's the bunny that then gets the asset afterwards that's in trouble.
That's when we'll talk about it again, Tiki.
Finally, NAB made a big announcement this week on its UK business. What's the lesson there on their UK strategy for you?
Well, it comes down to very simple, and it's true of BHP in the 90s, it's true of NAB. When a management team desires to get big, instead of to be good, so the pursuit of big over good means that they overpay for assets, be it assets overseas. And Australia has a reputation for paying too much for purchases overseas. Our track record is not that good when we buy things overseas. And by paying too much, we reduce the return on equity of the businesses that we run. And so the result of that is that we don't increase the intrinsic value, and ultimately price follows value. And if you're not increasing intrinsic value, your price isn't going up. And NAB's intrinsic value has gone sideways for a decade.
Well, very interesting, because some of these banks, of course, are now going into Asia, so we'll follow that.
We'll watch that closely.
Yeah. Roger Montgomery, thank you very much for joining us.
It's a pleasure, Tiki.